Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, April the 14th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Some economic data going on today. Basically, over in Europe, we have CPI numbers coming out across the pond and here, but over in Europe, final CPI came in at 0, was expected negative 0.1%. Final core CPI came in right in line with expectations at 1%. And the Great Britain didn't change rates. I guess that's noteworthy. But the CPI came in the United States at 0.1%, expected 0.2%, and core CPI came in at 0.1%, expected 0.2%. So across the pond and here, we're not really seeing any inflation whatsoever. That's got to, be looked at by the FOMC whether or not inflation is an issue. And as I've been saying for quite some time, it's not really an issue. The overall markets are pushing higher. About 15 minutes ago, NASDAQ was in negative territory, but we're just kind of back and forth in positive territory to negative territory, just slightly above the point of control that I talked so much about. It's funny, yesterday I was talking to somebody that was talking about the massive rally that we've seen in the equities in the past 2 days, and I was like, hey, we really haven't gone anywhere since the beginning of April. So at the end of the day, we've kind of rallied up, made some big pullbacks, rallied up, made some big pullbacks, which, in this trending sideways market, that's good for iron condors and strangles. So Friday, tomorrow, we're going to be talking about how to put strangles around some of these sideways trending markets. Not a whole lot going on with economic data or anything. So it seems like this might be the time to start implementing some of those. E-mini S&Ps, as you can see here, are pushing in positive territory /ES, just treading water, up 2 points on the day, but getting very close to their point of control for the daily chart anyway. On the E-mini S&P for the 15-minute chart, as you can see, we kind of rallied up overnight, came back off, and then this morning pushed higher, right back down to the value area low, and now up testing the intraday highs for the most part. On to a couple of things that I've done. I talked about this trade yesterday and the day before when somebody put this stock to me when we were down in the 29s, about $1 in my face. Somebody thought it would be a good idea to put that stock to me at 30.5, so they ended up selling their stock at 30.5. I had to buy it at 30.5. Well, then we got that big rally yesterday, which put me in the money on those. I talked about they increased my delta exposure to the upside, which was really nice. I ended up getting out of that entire trade today. I ended up basically selling the stock out at $30.88, and the April 4 puts, I got out of those 30.5, or the April 4 30.5 puts, the April 4 weeklies is what I'm trying to say there. So all in all, I made about 30 some odd cents on that. So right around 30 cents on that whole trade. Thankfully, so I got put that stock. On to Pepsi. I covered this yesterday, and I did this as it was the April 4 monthlies, and I did this as the 100 call calendar, and it was a gearing up for the earnings trades. Now, originally I had on the April 1 100 call calendar, I had to roll the April 1s to the April 4, collect some more money, and then ended up covering that whole trade. I ended up making about 50 cents on that whole trade yesterday. So it had gone up, tested those all-time highs, and come off. There were a couple other opportunities to get better pricing on that, but I waited a couple of days too long for the most part, but I'm out of that trade now. Like I said, Friday we're going to be doing the webinar on the strangles, so keep your eye out for that one. That should be a really good one. We're kind of going over some of these semi-basic strategies. The thing with this strangle is that's nice, even though it's not defined. You know, a lot of times when these strategies go against us, when they're not defined, there's a lot more opportunity to defend that and play around with some of those, because you can get more credits for it. When it's defined risk, it's kind of you know, you've made your bed and you lay in it. But with these, you can kind of play around with them. I've talked about with the GoPro and the Twitter how those were not defined risk strategies, and I've been able to roll those out in time for quite some time. And the GoPro is profitable. The Twitter is very close to being profitable, and I've had those on for the entire year. So just being able to collect credits, lowering cost basis, we're able to do something with a loser to make it into a winner. The other thing is somebody asked me about whether or not if you get stock put to you, whether it's a naked call or a naked short. Well, then we can, if we're long the stock, then we can start playing around with it in a different way to lower that cost basis. So we're going to be talking about all of that and how you do that tomorrow in the webinar. I don't have enough time to do that in a short daily market commentary, but stay tuned for that. You can go to protraderstrategies.com and sign up for that. That's all I got for you today, other than if you can't take that, take it easy.